one, that actually anybody can trade if you get the right instruction and you're willing to work a little bit at it and you have the kind of right mindset. That's the first thing, but also that it's actually quite tough. Not everybody can do it. So I think, a lot of people in the market, like this gentleman over here, we were discussing the conflict of interest earlier. Due to this conflict of interest in the retail brokerage market, you'll get told by a lot of people that anyone can trade. You'll get emails all the time. Make $10,000 a month in the international forex market. Yeah. The problem is that not everyone can do it, and a lot of it is lies. Listen, I don't profess for 1 second that technical analysis is not important. It is important because it provides a very good head check to overlay onto fundamentals.
Alrighty, everybody, welcome back to another CYPRX video breakdown. As you guys can see from my screen, as of time of recording, the total cryptocurrency market cap has seen significant price appreciation over the last 24 hours, trading with over $43 billion of inflows into the digital asset landscape. And in today's video breakdown, we're going to fundamentally cover why that is from an institutional standpoint. Bitcoin's market cap up about 2.6%, XRP's market cap up about 1.8%. I'm going to be showing you guys in today's video breakdown why you should not be reading and paying attention to retail fundamentals. They do nothing but distract and confuse you, and instead you should seek out like-minded communities of real investors and real day traders that actually understand the market dynamics to keep you engaged and keep you intertwined with the market fundamentals that are coming out that these large financial institutions pay attention to, these things that actually move and shift market sentiment. So I'm going to do my due diligence to kind of cover that for you guys in today's video breakdown. So I wanted to start off with just showing you guys that the market cap is up today. Now, this is what I really want you guys to pay attention to. This stuff is absolute garbage. This is what I'm talking about. It's just so crazy to me that these individuals, these manipulative news fundamental platforms are able to exist in the market. And I'm telling you guys right now, it would just behoove you to block them, to steer away from reading them, and just to not pay attention to that stuff. And instead, really just understand the fundamentals that you need to be paying attention to as a retail trader that moves market sentiment. That's central bank policy, that's geopolitical tensions, that's trade implications right now with trade wars and tariffs that are going on surrounding President Trump's new policies and whatnot. All of those things, whether it be labor market data, inflation data, economic statistics from the United States and performance of the US economy, those are the things that actually sway market sentiment, okay? So here we can see this is posted from February 20th, 2025. As of time of recording this video breakdown, it is the 20th of February. So this is just mind-blowing that this has even come out. It says today, JP Morgan warns of downside risk for crypto as institutional demand for Bitcoin and ETH futures weakens. So a retail trader reading this, and you can see this says 241,000 impressions. This video breakdown, if you stick around, if you're a highly intellectually inclined individual and you actually care about the markets that you're invested in, you will want to stick around for the entirety of this video breakdown because it's going to teach you something. It's going to teach you what not to pay attention to and what to pay attention to, right? This is why the vast majority of retail investors lose, because they think that these articles from Cointelegraph, CoinDesk, Daily Huddle, and all the rest of the retail influencers out there are covering what actually matters. This is bullcrap. This is just straight up a distraction. And then you can go to another fundamental platform. Look, this is from CoinDesk. I'm telling you right now, they're literally paid actors. Okay, look at this. This is a report from just yesterday, February 19th, 2025, and it says TradFi investors pile $38 billion in the Bitcoin ETFs, 3 times more than the previous quarter, right? So you have an article from just yesterday from CoinDesk telling you guys that TradFi investors, traditional finance, are piling into Bitcoin. And then you have an article from today from Cointelegraph telling you, no. Bitcoin and ETH futures are weakening. Steer away, right? Warning of downside risk. Okay, this is straight up manipulation in terms of fundamental, just straight satire. It's hilarious. I don't even know what to call it, honestly, at this point. And so here at CYPRX, okay, I don't want to toot our own horn, and I'm not trying to brag or boast. I'm just simply trying to show you guys real market dynamics from an investor and a trader who's been in this game for 9 years, and an individual who, in our private community, along with every other member that's in our community, has access to information that normal retail traders do not have access to. So I said here to you guys in this post, we are the most accurate retail analytics, or we have the most accurate retail analytics on the face of the internet. And I'm going to prove that to you guys in today's video breakdown. And I've continued to prove that over the course of time. If you're new here, you're most likely learning that for the first time. If you're a CYPRX OG, you already know that, right? So no magic indicators. We don't use any moon dates, no astrological, planetary alignments or whatever the heck people like think that these market makers are doing. I get that whole entire like family bloodline and like Illuminati type synchronicity and stuff like that. I totally get that. But if you took that information into a large hedge fund, into an asset manager, into a private family office, and said that that's what you're basing your technical analysis and trading decisions off of, they would laugh at you and kick you out. We even have individuals inside the private CYPRX community that literally work in large financial institutional environments. Okay. So I'm not telling you guys to just be like, oh, don't pay attention to that stuff. It's cool. It's intriguing. Don't get me wrong, but it is not what the large financial institutions pay attention to. Is there some type of attachment and connection there? Yeah, of course there is. But should you be trading and then making investment decisions off of those things? No, absolutely not. So no moon dates. We don't use any of those things in our, analysis. No outrageous Fibonacci price predictions or any kind of crazy bullish moon boy hopium. And we don't use retail strategies. We just use logic. We use institutional fundamentals, and we use institutional deltas. When I say institutional fundamentals, you guys can go and read about these things yourselves. UBS talks about them. Fidelity talks about them. BlackRock talks about them in their quarterly, weekly, and monthly reports, okay, which you can go read. Sometimes they drop them openly and publicly on their LinkedIn profile, so you can go and fact check what I'm saying, right? And institutional deltas. I don't know if I said that. Okay, so over 6 days ago, we gave trade idea setups on what we were looking at to take place on Bitcoin. We mentioned in a private Zoom call, which I'm going to share with you guys here in just 1 second. And I'm not trying to toot my horn. I'm just trying to show you guys what you should not pay attention to and what you should pay attention to. Now, if you decide to join our private community, that is up to you. I'm simply just showing you guys that accurate analysis and accurate fundamentals does exist. Okay. We told our private community members that we were looking for a bounce of the institutional delta 93113, where our first bearish targets existed. This was 6 days ago for institutional buys. We hosted a private Zoom call, fully breaking down what to pay attention towards in terms of fundamentals and structure, shifting our perspective from order flow and paying attention to whether or not sellers were going to overpower buyers or buyers were going to overpower sellers. The retail space has never seen this level of accuracy because no one except the CYPRX private community has access to these institutional deltas. So let me show you guys what I'm talking about, okay? This is our private community playlist, which is available in our Discord, right? For anybody that wants to access it, you guys literally have a backlog of probably like well over 100 private Zoom calls to learn about this information. And this is not even scratching the surface of the info that we provide, but check the date on this, okay? I love timestamps because it puts your money where your mouth is at. If you're following an influencer that cannot give you timestamps to back what it is that they're saying, unfollow them because they're probably lying to you and just doing hindsight analysis. Okay. We don't do hindsight analysis. We back everything that we're saying with timestamps, screenshots, and dates. Okay. So this is a fundamental video breakdown from February 10th. Granted, it is now 10 days in advance from this recording. Okay. So this was 10 days in advance. Pay attention to the levels, pay attention to the zones. These are all institutional deltas that our institutional scalper gave in advance to our private community via their software that they run on the back end to provide this information that, again, is not available to any other retail trading community on the face of the internet. And I'm going to blow your mind. You're going to see where Bitcoin bounced from just last night. Okay, so look at this and just pay attention to what I say in this Zoom call. It's going to be about a 1 minute long video clip. The area that I'm looking at is if the market was simply just building liquidity underneath of these lows. We see some type of fundamental intraday that weighs on market sentiment temporarily, which allows market makers to push price down into discount where they were previously buying from, or into lower delta levels. So something along the lines of, I don't know, maybe comments from Jerome Powell that weigh on the market sentiment temporarily. But then right after, we see inflation data come out showing signs of cooling that boosts the market sentiment surrounding Fed cuts. So we see something like this, a pullback down into discount, a bounce from that higher low that leads to a break in market structure, then that will give me a clean insight over to the right-hand side to look for buy continuations. I would like to see this type of pattern at one of these discounted levels, either at these most recent deltas, at the 93112, or under worsening temporary market conditions, a drop down into the 8997 to clear out the liquidity beneath these lows. Right? So again, in terms of my breakout strategy, that's what I'll be looking for. But on a deeper retracement, I'll be looking for a drop under temporary bearish conditions down into discounts. And then before, I'm not just going to go in and guess to buy at a bottom. That's not how this works. Once you see price come down into a discount, we're looking for that market maker pattern. We want to see a liquidation. So I just want you guys to hear that. We're looking for a market maker pattern, and I specifically gave out pinpoint accurate institutional delta zones. Look at that. The 93112.8 is circled right here on this Zoom call from February 10th, 2025. If we go over to the Bitcoin charts, people, you cannot make this accuracy up. I have not deleted any of the drawings. Okay, look at this. This is going to freaking blow your mind if you're still here. What did I say in the Zoom call? We need to see the institutional pattern. We need to see a pre-engineered low. We need to see a liquidation of that low, and we need to see a higher low come in after. Here's the pattern that I drew on that Zoom call. And if we zoom out just a little bit, go to the higher time frame, would you look at that? Look at where Bitcoin bounced from to the freaking T of a degree. If you're here right now and you're witnessing this level of accuracy, I'm telling you guys right now, it exists. It exists. Okay. Look at this. The 93112.8. Look at where Bitcoin came down into right above the 93112.8 to the T. And we saw institutional demand pick up, the institutional pattern, and we saw Bitcoin come back all the way into range at 98,000 and is now broken and retested above and continues its trend temporarily, depending on the market sentiment, which will continue to go over. Okay. You cannot get more accurate than this. We did not use any, you see no indicators on my charts. You see no magic Fibonacci's. I did not draw any Fibonacci's to make those predictions or anything like that. This is just sound, logical, technical analysis. Okay. I'm passionate about this stuff because I'm tired of seeing retail investors claim on the internet that success does not exist, that it's impossible to be this accurate, that whatever it is that they're claiming, they're wrong. People, you need to wake up. If you're watching this, I'm telling you guys right now, I'm not trying to encourage you guys to come and join our community. There is free information available that we provide here at CYPRX. You can follow us on Twitter. You can follow Institutional Scalper on YouTube, right? If you go over to YouTube and type in Institutional Scalper, you can find the gentleman's information who provides us the institutional delta zones, and you can watch literally over 50 free video breakdowns of him going over what institutional deltas even are. Okay. So I'm not trying to convince you guys to come and join our community. If you want extra access to this information, it's there. Then join our private community, but learn about this stuff. Okay. I encourage you guys to dig deeper. If you're watching this and you're like, holy crap, this dude really did call this move out without any indicators, without any Fibonacci moon dates or none of that crazy stuff, days in advance. And all these retail articles, keep in mind, I just showed you guys up to date, like as of time of recording this, are manipulating the shit out of retail. You got one article from CoinDesk telling investors that $38 billion of inflows are coming into the market. And then you got an article the day after of JP Morgan coming out and saying downside risks are there and Bitcoin and ETH are weakening. What are you even talking about? This is nonsense. This needs to stop. And we are advocates of trying to push for this nonsense to go away. Accurate analysis. I'm telling you guys right now. So anyways, let me continue. Okay. So let's talk about why the market sentiment is risk on today, intraday, because tomorrow it could change depending on when you're watching this. Tomorrow, or as of time of you watching this, the sentiment could be risk off. So let's cover what things could fundamentally change. And again, I just want to show you guys how we are ahead of the retail crowd. If you're still here, this is our Zoom call from just yesterday, February 19th, 2025. You can see down here at the bottom. Okay. I don't like to brag or boast. I'm just simply showing you guys accurate information. And in this Zoom call, we covered our February 19th fundamental report. Okay. Which again is accessible in our private Zoom call log, which is accessible in the private Discord. So any members, because we're an international team, sometimes team members don't get on the Zoom call, they miss it, they can go back and they can watch the recording. Well, let's just go over to some key highlights before we jump into the retail side of things. Always keep in mind, we deliver things ahead of the retail crowd. You do not want to follow an influencer that only gives you hindsight analysis. Hindsight analysis means, if you're new, it means delivering information after the move plays out. Okay, we like to give information before things happen in the market. So this is our February 19th report, as you guys can see. I've highlighted in purple some of the highlights that today we needed to see in order to see a risk on market mood. And you're going to see how the fundamentals today reflect exactly that. So let's just go over this. In purple, you can see if we scroll right down here, we talked about the things that we needed to see today to see the markets increase in value or bounce back from yesterday's decline. We said right here, outlook and key data releases. The crypto market remains above the $3 trillion mark and the optimism for continued gains persists, provided no new negative headlines emerge. However, any escalation in trade conflicts or geopolitical shocks could rapidly reverse the sentiment. Ideally, we would like to see the positive developments unfold surrounding the geopolitical landscape. This could be a factor that helps boost risk sentiment. That's going to play an important role today once we go over today's sentiment and why crypto prices are elevated today. So that was one factor. Another thing, we start to talk about the U.S. economic data here, where we said, looking ahead tomorrow, we have two key economic data indicators that will draw our attention. One, unemployment claims, and two, Philly Fed Manufacturing Index. And in purple, we have the bullish scenario that we discussed in yesterday's Zoom call, right? So going over those real quick, we said to our private community yesterday, in order to see a risk on market environment, if the unemployment claims number rises above expectations, significantly higher than 215,000, it would suggest softening in the labor market. A cooling job market typically reduces inflationary pressures and may encourage the Fed to consider cutting rates sooner to support employment. Number two, Philly Fed Manufacturing Index figures. What would we like to see? If the index comes in lower than forecast or significantly below 19.4, it might indicate a slowdown in manufacturing activity. A notable decline in this regional manufacturing gauge could be seen as an early sign of broader economic weakness. The Fed could then be more inclined to cut rates to stimulate economic growth. And last but not least, at the bottom, we said to finish off yesterday's report. Keep in mind, we delivered this before the move played out. Overall, the market remains cautiously optimistic as it waits for further economic data and clarity on trade policies. Should tomorrow's Fed speakers, pay attention, Fed speakers support future rate cuts, or tomorrow's U.S. data figures align with or underperform expectations pointing to a softer economic environment, the Fed's inclination towards rate cuts in the second half of 2025 would be reinforced, likely boosting risk assets and supporting crypto prices. Keep in mind, again, this was yesterday. Now, fast forward, I'm going to blow your mind again. This is a retail fundamental, okay? From CoinDesk, again, the people that are hindsight analytics and fundamental platforms. This is from February 20th, 2025. After we wrote and hosted our private Zoom call, look at what they say. Bitcoin boosted by dovish comments from Fed speakers. And what did we tell our private community members a day in advance we needed to see? We needed to see Fed speakers support future rate cuts, and we needed to see softer U.S. data. Well, fast forward to today, we saw a significant bounce from the weekly low of $3 trillion, currently now trading at the weekly high or above almost Monday's weekly high at about $3.19 trillion, seeing about, as of time of recording this video breakdown, $51 billion of inflows into digital assets. And so now let's cover why that is. Actively, as we are recording, you can see some of our private community members reading our updated report. Wouldn't you all like to have technical analysis that is accurate in terms of institutional deltas on any trading pair that you want before the move plays out? Levels on which to be looking at in terms of sellers and buyers from an institutional standpoint, fundamental analytics that come out before retail articles catch up. You have access to that. And I promise to you guys, it does exist. Come check it out. Again, that is why we offer a monthly subscription. Okay. So that way you don't have to marry anything. You can test it out. You can come and tap in for a month. And if you like it, stay. If you don't, cancel and bounce, right? I'm telling you guys right now that out of the over 1,000 members that we have, I'd say that about 90% of them stay. The ones that don't stay, it's most likely due to some type of uncertain financial condition where they simply just can't afford it, right? However, the individuals that do stay in this community, they love it. We're engaged. We host Zoom calls every single week. And I'm talking about Zoom calls where we have 50 to 60 participants on the call, actively engaged, answering questions, going over these things together as a team so we can learn and we can grow, right? That is what you want to be involved in these times, not the inaccurate bullcrap information that I've just showed you guys exists. You want to avoid that, wiggle your way past that, and find the real information. So now let's talk about why today the total cryptocurrency market cap is up. It's elevated. Keep in mind, we talked about and predicted that this would happen days, weeks in advance. Okay. And we've continued to do this, and we will continue to do this for our community members and show them that accuracy does exist in these markets. So let's just go over this. I'll end today's video breakdown with this, and this will also give you guys a forward-looking trajectory, and we'll just do some quick, simple TA as to what the market could see heading into this weekend. Okay. Because I'll probably upload this tonight, so you guys will see it Friday morning, and then you will have it for this weekend just to orient your attention towards some things that could unfold over the weekend. So far this week, we have correctly assessed, by the way, I'm speaking as if you're part of the community now, right? I'm talking to you like I would be reading this on our Zoom call. So far this week, we have correctly assessed that a continued market recovery would hinge on softer U.S. economic data. From yesterday's report, we particularly mentioned needing to see cooling labor market figures, a weaker Philly Fed manufacturing index, and a dovish Fed tone. Today, the crypto market is trading near this week's high at around 3.19 trillion. Up over $43 billion. That was as of time of writing this, but it's up a little bit more as of time of recording. The data released today shows a slight uptick in initial jobless claims and a slowdown in factory output growth in the mid-Atlantic region. That is a key highlight right there, because again, keep in mind, yesterday in our report, a day in advance, what did we say? I have highlighted in purple for you guys. What did we say we needed to see in order to see an uptick in risk assets? Higher unemployment claims and weaker Philly Fed manufacturing index, along with cooling in the geopolitical landscape and tariff implications, and Fed comments that support future rate cuts, right? It's so simple. So simple when you have these market dynamics to pay attention to. All of this aligns with expectations for softer economic conditions. These figures, alongside dovish commentary from certain Fed officials, have helped sustain optimism for rate cuts in 2025. Key economic data releases. The initial jobless claims. You can see here it's slightly ticked up for the week ending in Feb 15th, up 5,000 from the previous week, which was revised to 214,000 from 213,000. A modest rise in jobless claims suggests that labor market is beginning to cool, consistent with the Fed's efforts to ease inflationary pressures. Number two, Philly Fed Manufacturing Index decreased to 18.1 in February 2025 from a high of 44.3 in January, the highest since April 2021, which was below the forecast of 20. Although the index indicates some expansion, components like new orders, shipments, and employment all moderated. Price index, both paid and received, edged higher. But given the broader slowdown in orders and production, markets see a scope for inflation to trend lower over time. Why this data supports future Fed rate cuts. So we break this down in detail for our private community members. Economic slowdown signals. As jobless claims gradually rise, the manufacturing activity cools. It indicates the economy might be losing momentum. A slower economy tends to dampen inflationary pressures, reducing the necessity for the Fed to keep policy rates elevated. The Fed's dual mandate. If you don't know what that is, I highly suggest you join a like-minded community that teaches you what that is if you don't know that terminology. The Federal Reserve balances maximum employment with stable prices. Signs of softening in both the labor market and manufacturing suggest the Fed may reach an inflation comfort zone sooner. Hence, cutting rates in 2025 becomes more plausible to support growth once price stability is well in hand. Then, today's Fed's Bostic dovish comment. Atlanta Fed President Raphael Bostic, that's his first name, Raphael, noted accumulating signs of slowing labor market. So you guys can see here, remember, in yesterday's report, we said we needed to see dovish comments from Fed speakers. In today's retail report, you can see that that is what they noted as one of the reasons as to why risk assets are up today, i.e. crypto. Okay. And so now I'm trying to just go over what he said that even boosted that market sentiment and supported future rate cuts. Okay. So you're learning, right? You're not just reading these fundamental pieces and just being like, oh, okay, cool. That's good for Bitcoin now. No, you're actually understanding it, right? You're actually aware of what he said and annotating that and digesting that information. So that way you can make an accurate analysis next time these Feds speak and they move the markets with their comments, right? Atlanta Fed President Raphael Bostic noted accumulating signs of slowing labor market with longer average unemployment durations and lower job finding probabilities than pre-pandemic levels. Bostic also cited moderating inflation readings, particularly due to softer rent growth data. He labeled current monetary policy as moderately restrictive and projected 2 rate cuts in 2025. Previously, the market had only been pricing in one in either September or December. So this was significant to see and definitely one of the key factors today boosting market optimism as the markets start to price an increased probability of more rate cuts if a Fed speaker says something like this, right? Markets reacted to this by pushing the US 10-year Treasury yield and the dollar slightly lower, moves that often boost crypto prices as seen when Bitcoin ticked up about 0.5%, right? We also had tariffs and geopolitical factors. Although tariff headlines have been overshadowed by the Fed's policy outlook, they remain a concern. President Trump's potential new tariffs on cars, semiconductors, and pharmaceuticals could reintroduce uncertainty. I have that highlighted in bold because that is something heading into the weekend we need to be paying attention to. Market participants, however, are showing signs of tariff fatigue, often reacting less sharply to new announcements due to Trump's history of shifting positions. That means every time Trump comes out and he threatens the market about tariffs, they either don't come into fruition or they take a longer time to come into fruition. So the market's just kind of been shaking that off. Keep in mind, moving forward, any further tariff postponements or conciliatory rhetoric could support a more risk-on environment benefiting crypto. So anything that comes out solidifying that tariffs aren't going to be as bad as the market has perceived them to be, this could boost risk sentiment as the market would breathe a sigh of relief. Okay. Then we also had Middle East developments. Geopolitical tensions are another concern and have been a concern for some time. We've had tensions in the Middle East over the past consecutive couple of years. We've had the war in Russia, Ukraine, and recently we've had some major developments ongoing. Okay. So concerns over hostage situations in the region in the Middle East had previously weighed on market sentiment. We mentioned in a previous report that we needed to see positive developments in either Russia, Ukraine, or in the Middle East to boost market sentiment. This Thursday, we saw breaking headlines of a release of 4 Israel hostages by Hamas, including a mother and 2 children. This provided a measure of relief. Such positive developments can bolster market sentiment, reduce geopolitical risk premiums. Keep in mind as well, Russia and the United States have also been in peace talks with the whole entire situation surrounding Russia and Ukraine, which is also positive for risk assets. Albeit there's nothing been solidified on the table yet, they've still been in peace talks, okay? So looking ahead, tomorrow's Friday economic calendar. I'll try to get through this real quick because we're going on 30 minutes. We have the flash manufacturing PMI, flash services PMI. We have existing home sales tomorrow. We have revised UOM consumer sentiment and revised UOM inflation expectations. Pay attention. This is what we're going to need to know moving forward into this weekend and tomorrow. Continued signs of cooling in these indicators could strengthen the market's conviction that rate cuts remain on track for 2025. Additional Fed speakers are scheduled as well. Any dovish commentary that confirms a softening economic outlook, lower inflation expectations, or any continued rate cuts could further underpin the bullish momentum in crypto. Meanwhile, investors will also monitor any fresh headlines regarding the Russia-Ukraine conflict or the Middle East, or any updates surrounding Trump tariff plans, any of which could quickly alter the market risk appetite. So to sum all this up, a mix of slightly softer economic data and dovish Fed commentary today has reinforced the prospect of 2025 rate cuts, which has kept crypto markets strengthened. Looking forward, we will stay alert for tomorrow's data releases and any surprises surrounding geopolitical developments that might influence the Fed's policy path or risk sentiment at large. If we see any stronger data, hawkish comments, or uncertainties ramping up surrounding tariffs or geopolitical politics, we could see sell pressure heading into the weekend. If, however, the market sentiment continues from today under continued cooling in U.S. data and no new fear, uncertainty, and doubt surrounding trade wars and or geopolitical tensions, we could see a continued rally into the weekend and then heading into next week. So what would that look like in terms of price action? Okay, we have the total cryptocurrency market cap. I will just cover everything broadly. That covers XRP, Bitcoin, everything. It just kind of knocks it out of the park. In order to see a sustainable break above Monday's weekly high and a head back towards last week's high, something along the lines of this, right, where maybe we see some slight profit taking rolling over into Asia, right? Maybe some profit taking rolling into London and then a bullish continuation, or just a bullish continuation from where we currently stand, i.e. higher prices from where we currently sit. And for this overall trend intraday to continue. Ideally, what we would like to see heading into the weekend is no new fear, uncertainty, and doubt, and cooling in the overall economic data from the US that further supports future Fed rate cuts. If we can see those things tomorrow and then heading into the weekend, this is the type of price action that's most likely going to coexist with that environment, right? We're most likely going to see some type of higher low after slight profit taking and a bullish continuation, or a bullish breakout from where we currently stand, breaking this week's high and making our way back towards above last week's high at about 3.2, possibly even breaking above that at 3.23 to 3.3 trillion dollars. Inversely, if we see any new breaking headlines surrounding tariff implications, trade war escalations, any new geopolitical sparks that create fear, uncertainty, and doubt in the market, or any strengthening in the economic data from the US front that pushes back on the current rate cut optimism, we're most likely going to see some profit taking in these premium ranges. Whether that's we continue to tread a little bit higher, rolling into Asia and London session, for Asia and London session to be able to sell at a premium and gather up some buy momentum to create liquidity underneath of lows, and then a reversal, or we just see some profit taking from where we currently stand, correcting some of this week's bullish move, making our way back down into the weekly low over the weekend, coming in at about $3 trillion. Under those market conditions, this is the technical analysis that would most likely play out. A rejection of last week's high, a failure to hold above this week's high, and a correction of this week's bullish move. So I hope that today's video breakdown showed you guys that accurate technical analysis and fundamental analysis combined with logic, institutional deltas, and fundamentals does exist. Please, if you guys finished this video breakdown, I'm not asking you guys to tap into our community. It's there if you want access to it. What I am asking that you all do is you take it upon yourself to further your education in this space, whether that's you do it on your own behalf, you create a sense of awareness of liars in this space that are just giving you bullcrap, misguided information. And a lot of it's coming from these news fundamental resources that exist in the crypto sphere right now that seem very trustworthy. And I'm not saying that all the information that they chuck out is incorrect, because a lot of it is good, valuable information, but the vast majority of it is not. It is meant to misguide you. It is meant to mislead you, and it is meant to make you lose money. I know for a fact you watching came into this crypto market to make money. So why would you not make an attempt to join a like-minded community, give yourself an edge in this market so that way you have an advantage over the vast majority of distracted, mentally distraught retail investors that are getting completely sideswiped by tidal waves of information that is incorrect and misguided. With that being said, many blessings to you guys. If you stuck around for the entirety of this length video breakdown, then do me a favor, smash that thumbs up button and subscribe. I do appreciate the love and the support. With that being said, I'll see you guys in the next video breakdown.